Welcome into a daily editorial here on the KE Report. Happy to report that I am chatting with Jordan Royburn. He is the founder and editor of the Daily Gold. And Jordan, what we are going to talk about here relates bond yields and the recent action, plus some of what we think they will be doing more near the end of the year to the precious metals price, more specifically gold. Currently, we have seen a bit of a pullback in especially long-term bonds. I've chatted with Chris Temple a lot about this. But even though we've seen this pullback in long-term yields, and yes, there has been a lot of chatter about trade wars and a lot of people making the argument that people are moving into gold because they're scared and all these different reasons about a safe haven trade, you think that the move in gold recently has really been helped by these lower yields, people moving more into treasuries and gold. Why do you think that's been happening in the short term compared to maybe more of our long-term outlook, which we'll get into later?
Well, the one answer, Corey, is basically the stock market. I mean, that's the big difference because let's look at the other side. In November, gold started to perform well along with long-term bond yields, and specifically we're looking at the 10-year yield and the 30-year yield, and both those yields basically came up to multi-year resistance. And I mean, we were talking about a month or so ago that there was going to be a pullback, a counter trend move. I mean, they had a huge run, came up to some multi-year resistance. Sentiment was getting really extreme. So it was very predictable that we'd have this correction or weakness or counter trend move in bond yields that we're seeing right now. I think that's going to continue. Now, of course, breaking out, we've talked about this before, but if long-term bond yields break out later in the year, which is a good possibility, that is gold bullish because a breakout in long-term bond yields, higher rates on the long end, that's going to start to cause issues for the government in funding itself and also corporations because corporations have borrowed record amounts of money. They've been incentivized to do so by Fed policy since '09. So a breakout in long-term bond yields would ultimately be very bullish for precious metals. Now, on the other side, because gold has been until November, gold was for a while it was trading along with bonds. So lower rates was gold bullish, and so recently, we've had lower rates, we've had this counter trend move, and the reason gold has gotten a bid has really been because of stock market weakness. Like that's given people some jitters, and so looking further out or just looking over the short term, the stock market, I think, is going to be a bigger key than long-term interest rates for gold. I'm just talking about the very short term here, maybe the next couple weeks or the next month or so. And the reason for that is yields are correcting. So if yields are not rising, but the stock market is also correcting, that's going to result in softer policy, softer Fed policy, a softer policy from the market as far as them pricing in Fed hikes. And so what that means for gold is that equates to falling real interest rates. So that's the scenario where gold can do well, even if long-term rates are not rising or breaking out yet. Now, the thing that would be negative for gold is if the stock market during this period of a counter trend move in long-term bond yields, if the stock market were to rebound and keep rising and basically be steady to rising in that kind of manner. And that would be negative for gold because if that's happening while interest rates are not breaking out or reflecting higher inflation or higher inflation expectations, then that creates stable or rising real interest rates. Because in other words, if the stock market is rising, the Fed is going to be tighter with its policy. And so if long-term rates are in that environment, if long-term rates are not threatening a breakout, then temporarily that equates to stronger real interest rates, which is gold bearish. So I know that's a lot to take in, but to kind of sum it up in one or two sentences, the stock market is going to be key for gold here in the very short term. And if the stock market, I mean, it looks like it's going to rebound because the S&P is bouncing off the 200-day moving average. I saw the daily sentiment late last week. It was under 20% for stocks. So I think more likely than not, the stock market's going to rebound here. But gold is unlikely to break out if that happens. But if the stock market rebounds and then it just kind of consolidates and trades in a range, that gold can still hold up okay in that environment, and maybe try and break out again at some point. But if the stock market's going to rebound and then run back and retest its high, I mean that's not a good scenario for gold here in the short to medium term.
Okay, so really it comes down to what the U.S. equity markets are going to be doing. Yields will have an impact on that, especially if they break significantly to the upside, because it will put so much pressure on companies and you could argue the overall U.S. economy. But there is one concept here, Jordan, that deals with what the U.S. equity markets did, especially last year, where they just rose almost day after day, very methodically, very slowly. And gold, for the most part, held its own. It traded in a pretty tight range. The issue was, though, that it almost seems like, at least recently, gold stocks have been following the actual equity market. So weakness in the equity markets has benefited gold, but it has not benefited the gold stocks. Do you think this relationship is a concern, and if it could continue?
Not really, Corey. I mean, I think the weakness in gold stocks and also silver is more a reflection of the fact that the market doesn't think gold's going to break out yet. I mean, if you see gold making a close above 1360 and then closing above 1375, you're going to see a really sudden and sharp rise in the gold stocks. So I just think it's kind of a coincidence the way they're trading with the stock market. I don't think it's that important. I'm not concerned about it as a gold bull. I think the weakness in gold stocks and silver is, again, more a reflection of the fact that gold is not ready to break out yet. Because the other parts of the sector, gold stocks and silver, they will strongly outperform when gold is breaking out and begins an impulsive advance. We just haven't had that yet. And so therefore, when you don't have bullish sentiment in a market with momentum that's trending upwards, then the more speculative parts of that market are not going to see inflows of capital. So I've already said it, but I think it's more a reflection of the market thinking that gold's not ready to break out yet, and therefore the more risk capital, more aggressive speculation is not focused on those areas just yet.
Okay, Jordan, what about gold against foreign currencies? You and I talk about that a fair bit because too much I think we focus on gold and the US dollar relationship. Gold and foreign currencies can show a bigger picture of maybe how gold is doing in terms of breaking out or having some more interest in the sector. Gold right now, in terms of foreign currencies, it continues to trade in this very tight range that it's been in for now almost 2 years. What do you have to say about the trend that we're seeing, which one could argue has been pretty trendless, just a choppy sideways motion?
Yeah, trendless is a good word. When you were talking there, that's exactly the word that popped into my head, and then you said it there. It's really now gold against foreign currencies. This actually bottomed at the very end of 2013. I mean, that's a long positive divergence to the gold price. And then it had a huge pop in early 2015. So that was signaling that the bear market in gold was coming close to an end. And this had a really good rise. But, I mean, Corey, it's been almost 2 years since it peaked. In over the last 18 to 24 months, it's really been weaker than gold and U.S. dollars. Because as we've said before, gold has performed well over the last year to 18 months, really because of the weak dollar. I mean, fundamentally, real interest rates have actually risen during that period, which is bearish for gold. But again, gold's been able to hold up because the dollar's been extremely weak. And looking at gold against foreign currencies, you're basically just taking out the dollar as far as the gold market. And as you said, I mean, you can look at I have my own index that I use sometimes. You can also use the ETF UDN, which is the inverse basket of the dollar. So you can plot gold against UDN. That works really well. And as you said, I mean, this chart has been trading in a very tight range. It looks rather trendless. It's trading above the super long-term moving averages, but it's trading below just below like the 200 day and the 400 day. After yesterday or the day before, I think Monday, it had a nice day, and before gold had sold off in the last hour, it was looking pretty healthy. So you can draw a trend line on this chart going from over the last year or so, or 9 months or so. So you can draw a trend line there connecting the tops, and we really need to see that ratio break to the upside. And I'm not sure that's going to happen before. I mean, it'd be really nice if it happens before gold breaks out, because it would give us a really good leading indicator. But it may just happen at the same time as when gold breaks out. So it's really hard to say. But in addition to obviously watching gold, I mean, the two things I watch mostly are gold against foreign currencies and gold against the stock market. And gold against the stock market has made a lot of progress recently, but it remains to be seen if that's going to be stable and continue to rise over the next month or two, or if that's going to go back and test its recent low because the stock market rebounds and gold doesn't break out. So a lot of factors to consider here, but we may have seen an important bottom in gold against stocks, and gold against foreign currencies is just, as you said, it's trading in such a tight range. And if it could just go up a little bit more from here, it might be able to break its downtrend, and that would be a really good sign. But there's no indication if that's going to happen in the next week or two, or in the next 5 or 6 months. We just don't know yet.
And that's kind of what we're all waiting for. One final comment, because it's staring me right in the face when I'm looking at this gold against foreign currencies chart, is the Bollinger Bands. On this monthly chart, I think it speaks to how tight of a range that this chart has traded in. Plus, you look at silver, a longer-term chart. You look at gold, not to the same extent as silver, but on the long-term charts, the Bollinger Bands are getting quite narrow. Yes, they can always get a little bit more narrow, but on this chart that I'm looking at, the gold to foreign currencies, they are the most narrow that they have been going back over 10 years. Do you think that this is also showing that it's all kind of lining up, that soon, maybe not tomorrow or next week, there will be some break, whether it's up or down?
Yes, absolutely. And I think we talked about this a couple weeks ago. I wrote an article about the extremely low long-term volatility in precious metals, and if you look at Bollinger Bands that are 40 weeks, 80 weeks, even 160 weeks, and then you look at the ATR indicator, which is also a volatility indicator. You look at GVZ, which is the gold VIX. I mean, all these things are basically pointing to 10, 12, 15-year lows in some cases, and that's some extremely low long-term volatility. So the market is really setting up for an explosive move. That doesn't mean that it's going to suddenly happen and we're going to wake up one day or 1 week and volatility is going to shoot up. I mean, it can happen relatively quickly, but it has to be a process. But there's no way to know, Corey, if, again, the timing. I mean, we don't know if gold is going to break out in the next couple months or if it's going to take closer to 6 months. We don't know if gold's going to have a big correction and go to 1265, which is possible. We don't know if that's going to happen before it breaks out. We're just sitting here. We're in a waiting game. I mean, I feel very confident that gold is going to break out eventually, but we don't know when. At least right now, I'm not seeing enough evidence to tell me it's going to break out immediately. But back to the volatility. I mean, that if once assuming we do get a breakout in gold, the volatility tells us, I mean, it's so low that this move could really have some staying power. It's going to be very significant if it happens. I mean, gold could make a much bigger move than just going up a couple $100. I haven't looked at the volatility in gold against foreign currencies as you did, but I'm not surprised that it's showing or that it's coming up pretty extreme on the low end, because that's what we're seeing throughout the sector. It's not just gold. It's not just silver. It's not just the gold stocks. It's also gold against foreign currencies, as you said. So very interesting setup here for precious metals. These long-term levels of volatility are just extremely low. So this market at some point over the next year, it could transition to the opposite, where we get a breakout and then we see momentum start to pick up and volatility really start to pick up. And assuming that breakout is to the upside, which we probably all think it is, that's going to be very exciting for us, but we just have to be patient for the time being.
Yes, we do. I think great comments there, Jordan, to summarize everything that we're looking at in the charts. It's not necessarily going to happen tomorrow, but for as boring as this market has been, usually that ends up as a positive in the longer term sense. But eventually, I think we're all just waiting to see where that breakout occurs and how far it actually runs. Jordan, great chatting with you. Have a great rest of your day, and I always appreciate your comments.